ladies and gentlemen from CBC Dubai. We're wishing you all the best. We're hoping you're having a wonderful Sunday morning, and it's a great start to your work week. It's for some of us that are working at home. I'm glad you're working remotely. I'm glad that for the people that are back in their office. Whatever the new normal is for you, we're very happy. But we have decided that at CBC Dubai, the new normal should be called the better normal. We want you to make it a better normal, and that's why we're here for you. We've got your back. We've got, we are here, we care, and that's also why our sponsors and our friends are so willing to do these webinars for you. They take out time of their busy schedules, just like you take time to attend them, to make sure that we're going in the right direction. So I want to, oh good, the poll results are up, so let's take a quick peek. Special thanks again to Heban Sankita for always working in the background to make things run, you know, more than smoothly. So we've got some things, we've got people are doing excellent today. So far so good, and we've got a lot of good happening too. We've got actually many more early birds. Well, maybe it's because of the amount of light here. And just to say that the majority of people watching today are in financial services, and we do have an other. So the other, the trades, logistics, real estate, no one from tourism, construction, they're all lower amounts, but all very, very important. I want to say special thanks to our sponsors. I don't know if how many of you know that we have Legacies, the Emirates Group, which have sponsored so many things for CBC Dubai. They did our Shark Tank, and I can't tell you what movers and shakers we got out of there. I've got little goosebumps thinking about it. I cannot wait till our next one. And we were so proud of ourselves. We didn't take any body parts off this year's, like real Shark Tank people, and we actually made their businesses grow. Not to mention our other years in the past, they have gotten their businesses off flying. So as you know, we have our CBC Industry Breakfast webinar today. It's an update on compliances, an overview of economic substance and regulations. We've got our keynote speakers, but we also have the pleasure of Ashal, who will be kind enough to tell us more and open up. He is directly from Legacy. Ashal, are you there?
Yes, please. Can everybody hear me?
Yes, we can. I'll let you take the ball because you're going to make sure we're in the right direction. Thank you.
Great. Thank you very much, Diana. Really appreciate it. I just wanted to introduce our speaker and talk about a little bit about what's been happening in the UAE, and just as a prelude for our expert to take it on. I'm an ex-banker myself, and many years ago, we saw the Anti-Money Laundering Act come into play with the central bank. All banks asking questions on entries coming into it. The old Dubai, where there was no regulation, versus it started moving towards regulation with the AML, anti-money laundering regulations at the central bank. Then, followed by that, about 2.5 years ago, we started the VAT, the value-added tax. That came into effect, and as you can say, most businesses are affected by that. So there's a compliance element to that as well. And now, suddenly, we've got this new one, which is the economic substance regulation. So we moved from AML to VAT to economic substance regulation. And, you know, it's heading in a more, so the UAE is heading towards a compliant environment, and you can call it a little bit of a tax environment from that perspective. But I guess the whole world is heading in that direction, and we don't want to be left alone. We want to be called a well-regulated economy or a well-regulated country. So with that background, I just would like to introduce Nirav Shah, our expert, subject matter expert on the matter, on the topic. Nirav, just to give his background, after working he's a chartered accountant by education, by profession. After working for KPMG for many years, he started his own practice. He's an expert on cross-border taxation, international structuring, corporate finance, and more importantly, the tax aspects within the UAE. He runs a VAT practice, a training practice. He's probably trained over a few thousand chartered accountants practicing in the country. So we call him a subject matter expert and he's truly earned that title. So I'll hand it over to Nirav. But Nirav, tell us what's going on. Start with AML, go to VAT, now economic substance. What the hell is going
Sure.
on?
Thanks a lot, Achal, and thanks for those kind words. What we will do is, yes, we are moving towards more and more compliances, and that's the only way to move forward as it seems, because OECD, IMF, BEPS, everything is combined together, and it is increasing international pressure on UAE to bring in more and more regulations and not be unregulated economy, as they call it, And if you want to be a major player in the international game, yes, we will need to embrace these compliances and move forward with them. So let me start my presentation. Heba, can we have the score of the last poll just to see where are we? And so we just connected, and everybody, 85% is aware of the regulations, and more than 60% are already ready, and they know what needs to be done for compliance with this. That's perfect start for me.
Is that a perfect start for you? It seems like they're actually quite onto this. I'm very excited.
Yes, so that's the best part, that you have an audience who is going to ready to ask questions for you. So that's what you need.
Exactly. One more thing, audience, please, if you want to start writing right away into the chat box in the questions, we will have Q&A at the end as well, but go ahead and start writing, and we were always in the background looking at your questions so that way we don't miss any of them. Thank you.
Yes. So what we are going to take you through today is an overview of why exactly the economic substance regulation were introduced into the country, what all it covers, and of course what are the requirements, and short overview of other procedural aspects of the regulations. Most importantly, why was it required? So as Achal mentioned, it started with the AML project few years back. Then VAT came in under the pressure of GCC and IMF, to be precise. And then simultaneously, OECD was already undertaking a base erosion and profit shifting project, which has been going on since 2012. By 2015, there are 15 action points identified for all the OECD member countries, of which they said that there are 4 minimum action points which everybody needs to adopt. And that's where they started pushing all the countries who are not even members of OECD and who are either low or no tax countries, and all of them offshore havens and everything. They all were pushed into this direction to start adopting these compliances. So what are the 4 minimum action points which were required to be adopted by everybody? Action 5 on harmful tax practices, which is where the genesis of this economic substance rules comes in. And then to prevention of treaty abuse, country by country reporting, which also we saw last year, the law being introduced for that. And of course, the mutual agreement process to implement a dispute resolution mechanism. Now, as a result of this pressure, what are the actions that UAE took? So UAE adopted or joined the OECD's BEPS framework in May 2018. That means it agreed to implement the minimum 4 actions which I mentioned before. So as a result of that, immediately in June of 2018, UAE signed the multilateral instrument, which is a common document of OECD, whereby all the bilateral tax treaties, double tax avoidance treaties, will stand amended for certain clauses to be included by all the countries who agree to it. So there are already 2,500 to 3,000 tax treaties which are document between the two countries, which are in operation as of now. It was difficult to amend all of them, and it would have taken much longer. So OECD came up with this one multilateral instrument where every country needs to sign and adopt it to the extent that they want to be implemented in those treaties. And so UAE also adopted that in June of 2018. And therefore, all the treaties of UAE now has to be read and has to have a principal purpose test to apply. Therefore, any transaction which is taking any treaty benefit needs to satisfy the principal purpose test. And similarly, few other things. And therefore, in April of 2019, UAE introduced 2 laws. by way of Cabinet Resolution number 31 and 32, which is the Economic Substance Regulation and Country by Country Reporting Regulation. Again, country by country reporting regulation is more to do with large corporates and multinationals who has revenues in excess of $800 million and above, and only to them this applies, not to everybody else. But when it comes to economic substance regulation, and we'll see, it covers almost everybody, and therefore it was under the pressure of OECD that UAE had to bring in this legislation. And ESR, the Economic Substance Regulation, applies to all entities for their financial year which commences after 1st of January 2019. So the law or the cabinet resolution came in on 30th of April. The first guidance was issued on 12th of September. Thereafter, in January 2020, the government issued, or Ministry of Finance issued, the licensing authorities which are responsible for administering the regulation and also the FAQs. And then in March, they issued the relevant activity guide as to what gets covered in different activities here. So who needs to comply? Every natural or juridical person is licensed by a competent licensing authority in the UAE to carry out one or more of those relevant activity in UAE, including a free zone, including a financial free zone. So all your offshore entities also technically gets covered, as well as all the mainland entity which are registered with Ministry of Economy also gets covered. Only people who are exempted are the government entities, where government or any of the Emirates or any of their companies hold more than 51% direct or indirect ownership. This is the only exclusion which is there from an ESR compliance perspective. Therefore, what is covered in this is main 9 activities. What are those 9 activities? And we'll see all of this briefly. So 3 or 4 of them are regulated and rest are more activity which everybody carries on, and that one needs to look at in more detail. And we'll go into that once we define them. So a banking business is again regulated business. Only those who have license to operate as a commercial bank from either a central bank in UAE, which is the mainland license, or category 1 license from either the DIFC or the ADGM and regulatory authority there at Dubai Financial Service Authority or Financial Service Regulatory Authority in ADGM. So only those people who are allowed by the license to either take the deposits or give the loans, overdrafts or guarantees, or any similar facility, or make investments are covered here. And what is not covered, very importantly, is all the money exchange guys and the stockbrokers who arrange or who are financial intermediaries who help you buy or sell domestic or foreign stocks or bonds or currency or commodities. So they are not covered. Only the people who are actually in the banking business are covered. What is important to know here is that while we have a lot of representative offices of a lot of foreign banks here in DIFC and in mainland as well. So if they are only in advisory and arranging the other services to client of the banking group, but they are not actually carrying on the banking activity, then they may not get covered under the banking business, but they will still be covered maybe in any other activity that we see, So we'll look at that in further detail. What is important for you to understand at this point is that the way the regulation applies is that first one is to determine whether they are carrying on any of this relevant activity or not. For this, you don't need to look at only what is there in your license. So the entire ESR regulation is more about substance over the form. And therefore, you may not have certain activities which are mentioned here in your license at all. But if you're carrying on those activities, then you still need to comply with the law. And that's why this is something where you don't need to look at only your license, but what you do. So first step is to identify whether you are falling within any of these relevant activities. The next step then is to see what then you need to do. So then if you're falling in these activities, one, of course, you need to notify, which is the immediate, where the deadline is this month end for most of the businesses, and for most of the free zone and all the regulatory authority, the deadline is 30th of June. Now, after having notified if you are indeed carrying on the banking business or any other activity, then what you need to see is that what are the core income generating activity within those activity, and those are something that you will have to demonstrate that you are actually carrying on in UAE. So there's a distinction between a relevant activity and a core income generating activity. So each relevant activity has between 3 to 5 core income generating activity, which needs to be carried on for the people who are actually carrying on this relevant activity in UAE to carry on this activity also in the UAE to demonstrate economic substance of their operations. So that's only one condition. We'll come to more later. So that's the distinction between a relevant activity and a core income generating activity. So for a banking business, core activities are raising funds, managing risk, taking hedging position, providing loans, and managing capital, preparing report to investors and government. Similarly, insurance, again a regulated business. So only those who has a license from the insurance authority can operate this business, or from the regulatory authority of DIFC and ADGM. And again, like banking business, only the insurance companies which are in the business of accepting risk by effecting a carrying out contract of insurance in both life and non-life sector, as well as reinsurance and captive insurance. So all that is covered, but only the insurance companies are covered. So insurance brokers, agents who bring business to these companies are not covered, or who may be booking the businesses with the London Lloyd's syndicate or whatever, they are not covered in this specific aspect. So only the insurance companies are covered. But again, you need to see the other aspects also to see whether you are completely falling out of the regulation or not, right? And again, the core activity for insurance is predicting and calculating risk, insuring or reinsuring against the risk, and underwriting the insurance and reinsurance. Similarly, investment fund management, again a regulated business. So you can only have a license either from Securities and Commodities Authority, SCA, in the mainland, or you can have license either from DIFC or ADGM in this regard. The distinction here again is the fund is not covered in this activity. The investment fund management is covered. And therefore a fund manager who is licensed in this regard is covered in this activity. So if it is a self-managed fund where the fund manager is also part of the fund, then that will be covered. But if it is generally structured as a separate fund and is a separate fund advisor and all that, then only the fund advisor or fund manager is covered within this activity and not the fund per se, right? So with that, the core activities are again taking decisions on holding and selling of investment, calculating risk, taking decision on currency or interest fluctuation, and again preparing reports for investors or government authorities or regulatory authorities, as the case may be. Lease finance. Here, typically, lease finance is supposed to be a regulated business. Okay, so who can give you license for, if you want to take a license of being in lease finance business, only a central bank can give you license, or again, DIFC or ADGM can give you the license. However, the definition here of lease finance is much wider. So it covers offering credit or financing of any kind for a consideration. And it includes intra-group financing, So what do you mean by offering credit or financing? It could mean making loans to any related or unrelated parties. It could be entering into any finance leases in relation to any assets. They've excluded the land and related assets to that. But also providing credit in form of a hire purchase agreement or long-term, So all this kind of financing arrangement are within the ambit of this activity. And therefore, we say that this is much wider than what your license can do. So there could be traders and trading entities which could have given interest-bearing loans to others. And therefore, technically, they might get covered here. And they may not have a license for doing a lease finance activity, So what is important to determine this is that once you are given such credit or financing, but remember, this is only to be finance lease and not operating lease. So any rental of any assets other than land or building is not covered here. Okay, so it has to be a finance lease, by which it means that you are making the finance available to them and you're only transferring the ownership at the end of those term of the finance lease, And the important point is that there has to be a consideration for any such credit or financing. It could be interest, it could be profit, it could be origination fee or a processing fee. It could also be gain on conversion of loan into an equity, or any late payment penalties or whatever, So any kind of consideration, if you have agreed with the lender, then that gets covered within this activity. So if there is no expectation of consideration, you don't fall in lease finance. Okay. So again, normal investment in bonds or similar securities or debt instruments which are traded on regular exchange or something, then again, that's not considered here or included here. So this one, while a regulated activity, it could be there for a lot of businesses, and that's why the implication for this is much wider. Again, 5 core activities there: agreeing the funding terms, identifying, acquiring asset to be leased, setting the term of duration of monitoring, and managing the risk. Headquarter business, again, this activity, like I said earlier, you don't get a license for doing this activity in UAE. So there's no free zone which offers you a license for being in headquarter, right? So you by default exist for either a trading or a holding business, and because you assume the responsibility for the overall success of the group or responsible for an important aspect of the overall group's performance, the group here could also mean the region. So we know that a lot of regional headquarters are based out of Dubai or UAE. So they may be taking care of the operations in, say, Saudi or Qatar or Oman or Kuwait or Bahrain, for example. And what is the symptom of that? That you have all the senior management who is based here. So you are providing the senior management services. You are providing important guidance on assumption or control of the material risk of the business. And you are providing substantive advice in relation thereto. So if you are doing all of this, then you will fall within this headquarter business as part of the relevant activity. Here, what one must remember is that your org chart or corporate structure and your position in the corporate structure is not relevant. You could be a one small SPV only housing or providing services, and that you can still get covered as a headquarter business. And therefore, you need not be a direct or ultimate parent in the group to be a headquarter. So in a lot of businesses, they just have an entity which does this services and they still get covered. So the ambit is very wide. And again, you need to look at substance over the form, and you won't have this as reflected activity in the license. So you'll have to actually see what is going on and what activities and what services are being rendered. How are these being cross-charted to different entities, and then you'll have to determine this. So 3 core activities here, again, taking relevant management decisions, incurring operating expenditure on behalf of the group, and coordinating the group activities. Shipping business here, they've defined the shipping to be in a negative way. So what is not included as a ship is all the fishing vessels, the small vessels where tonnage is less than 10, and all leisure vessels. So they are not considered to be in the shipping business. However, you are in the business of shipping. If you are in rental or on a charter basis of ship, if you sell tickets or similar documents for that, if you even do the use or maintenance or rental of containers alone, so you're not actually running a vessel, but only if you rent the containers to be loaded on those vessels, that also can get covered. And another important part is management of the crew of the ships. There are a lot of manpower companies which only does the crewing for the shipping, for ships, and they take care of the entire operation. So that gets covered also in the shipping business. Only thing that is excluded here is the chartering of ship on a bareboat basis. So if you are only letting your ship without any operation management and the crew attached to it, then that's excluded. But if you do a time or a voyage charter, anything of that sort, then all that gets covered within the shipping business. And if you're actually running your own fleet of vessels, then of course you're getting covered with it. And again, like other activities, your travel agencies and international shipping agencies, which only book certain part of the cargo and all, are not covered within this. The main core activities here are managing crew or overhauling or maintaining ship, and overseeing and tracking the shipping, and determining what goods to order, when to deliver, and organizing the entire voyages, right? Holding company, I'm just going to quickly go through the 9 of them. Then we can look at some procedural aspect and open up for the other things. So holding company, again, this is a very, very specific and a narrow activity, as I would call it, because what they do is that you're covered in holding company only if you have a license to be a holding company, if you only do equity investment in a company, and you do not carry on any other commercial activity in that entity, and the only compensation that you get is dividend or capital gain out of this. So moment you start adding any other activity along with this, then you're out of the holding company business, so it's a narrow definition, and that's why the substance requirement also is much reduced for this activity. So if you are deriving income from other sources, you are not part of the holding company business. Only if you have income from dividend and capital gains and you only hold equity interest, then only you are part of this holding company business, right? So moment you have any other equity interest, then you're outside the purview of holding companies. I'll give you a table just to understand. So if there's a company which holds immovable assets, like there are many which is in Jabza offshore, which holds properties in Dubai, then that's not a holding business. Holding of income from immovable asset, even rental coming in, that's not holding business. So that's specifically excluded. If you're holding movable assets, so then if you're holding movable assets and if you're earning any interest or something of that sort, then you might be in a lease finance business, but you may not be in a holding business, right? If you're holding an intellectual property asset, and we'll discuss that. So if there is a separately identifiable income from that IP assets, then you might be doing an intellectual property business, but you're not again in a holding company business. So only when you hold equity interest, only when the income is dividend and capital gain, that you are in a holding company business, and it has a reduced substance requirement. And moment you add any other activity, any other trading or manufacturing or anything else along with the holding, which is not one of the relevant activity here, then you are outside the purview of regulation, but you are not carrying on the holding business. So again, it's a very narrow definition. Intellectual property business or activity. So again, here there are 4 or 5 types of intellectual property, which is copyright, patent, trademark, brands, and technical know-how. And if you earn a separately identifiable source of income from exploitation of any of this, in terms of a royalty fee, a franchise fee, or a license fee, or even capital gains on sale of all of this, so those gets covered in the intellectual property business, right? So what is important is that one has to own any of these assets and has to have separately identifiable source of income in that connection. Now, a lot of businesses, as part of their own groups, like we have Legacy as our brand name, but we don't earn a separately identifiable royalty income for using the name Legacy, and therefore we are not in the IP business. So a lot of companies will have a brand name, but if they are not licensing that brand name and not earning a separately identifiable income stream from them, then that's not considered as IP business. So just to clarify that part. The another aspect, so there has to be a patent or non-trade intangible, and therefore there is another concept of high risk IP. And this is very important to understand, is that a lot of multinationals use this window of ownership of IP and then generating a royalty income in non-tax jurisdiction. That's why this entire debate started under base erosion and profit shifting. So what they categorize as high risk IP is in a case where a company has not developed IP himself or themselves. It is acquired from a connected person, and I'll just take you to the so it did not create the intellectual property, it only acquired from the connected person. It acquired as a result of a consideration of funding a R&D for development of this to another person, and then it predominantly licenses this to another connected or group company to earn royalty or license fee out of it. So if you do any of this, then that's regarded as high risk, and therefore by default you are assumed that you are not going to comply with the economic substance regulation, and all your information in terms of your parent company and UBO and all that is shared with the relevant authorities. So that's again very specific to large multinationals are exploiting in such a way. I don't think this is going to apply across the board to everybody. And as I mentioned, so there are IP business and there's high risk IP. High risk IP is understood to be not meeting the substance requirement. And otherwise, in the IP business, you need to show the substance of taking strategic decision, acquisition by third party or subsequent exploitation, ancillary trading activities through this intangible assets are all done in UAE, and then those decisions are taken here. Then that's get covered. So again, like I mentioned, they're deemed to have failed the ESR, so there'll be an exchange of information if you fall within the high risk IP. Now we come to the one of the most important and most widely impacted activity, which is distribution and service center business. Again, you don't have a license category of being in distribution or a service center business. What gets classified here is there are two activities. One is distribution and other is service. So let's break the two. So what is distribution? It means the licensee, the company here purchases the goods from a foreign group company and distributes those either here in UAE or across, either to its group company or to third party customers, you know. So basically they're all larger brands and others which manufacture their goods or products, and those are being done in different countries, and those they have set up an entity here which only does distribution, say for the region of Middle East and North America and all of that, North Africa, sorry, and all of that. So those kind of businesses gets covered here. Again, when you deal with pure third parties, you're not going to get covered here. So pure trading entities are not covered here. Okay, and similarly, when you are providing any consulting or administrative services to one of your foreign connected group person, that gets covered here as well. So if you have a related entity in UAE and you provide service to them in UAE, you don't get covered in the service center business. But if you provide the same service to a foreign connected person which is in the same group of ownership, then that is reported as service center business, right? So again, one needs to be careful that not a lot of this will be on your license. You have to see actual conduct of how you do the business and then determine whether you fall within the distribution or a service center or not. Again, this has a very, very wide implication, but what they have done is that they have carved out an extension only here in this activity. That if this is done as a one-off transaction and it's not a regular recurring way of your business, then that's to be excluded. And you don't need to demonstrate substance for that one-off transaction. But in none of the other activity, such exclusion was there for one of the transaction, you know. So even if you're given one-off interest-bearing loan, you still get covered in lease finance, you know. And even if you made only one investment into a company, you still get covered in the holding company business, you know. So this is just an overview for that. And then the regulation does not define a connected person in terms of percentage of ownership. It just says connected person who is related to one or more natural or jurisdictional person through direct or indirect ownership or control or common control. So again, one needs to look at what is the threshold that one looks at for common control or ownership. And generally, we look at other related legislation like AML and others, which says 25% or more is a normal acceptable benchmark. So we would try and apply that kind of benchmark while determining a common controller connected person for this purpose as well. All right, so the main activity or core activity for distribution is transporting and storing of goods, managing inventory and taking orders. So again, it signifies that you need to bring the goods into UAE and then manage the inventory and then distribute it across. And for service center, it means providing consulting or other administrative services. Okay, so that's about the 9 main activity. If you fall in any of them, what you need to do, you need to demonstrate 3 things. One is that company should be directed and managed in UAE. So your control and management and your board of directors composition and directors meetings to be held here. The core activity which we identified has to be performed in the UAE, and the company should have adequate level of qualified employees, premises, and annual operating expenditure. So you are not a letterbox company and you actually have substance here you have an office, you have some employees to carry on those activities. So again, it's adequacy is required. It depends on if it is a holding company. You may have only one director and maybe one employee, and you can still work with that. But if it is actually carrying on distribution or service center, then you need a battery of people to be employed in UAE to help you carry on those kinds of activities. So that's the requirement which you need to demonstrate. Again, what is the so the authorities have 6 years after the end of financial year to check whether you've done all this correctly, and also to check whether you've done any misrepresentation of all of that. Offenses and penalties like UAE, it is very high. So failure to notify itself is 10,000 to 50,000 dirhams. And if you are failing first year, which is now, which is 30th of June, if you fail to do the notification, one is they will have penalty at the discretion of the licensing authority. But the second and more importantly, that you will be deemed to have failed the economic substance. And therefore your information will be exchanged with the competent authority of your parent company or ultimate parent company or ultimate beneficial owner. So this is where the trigger comes. And in fact, if this failure continues for the second year, then of course the information is exchanged, the penalty is increased to 100,000 to 300,000, but also that the regulatory authority will then ask you to suspend, withdraw, or they will not renew your license. So that's why this compliance is very, very important. Again, there's no tax or there's no payment to be involved, only information to be shared with them, and that's all. But you need to be careful and do it in time. Okay, and these are some of the sample formats which many of the free zones are using it differently. So I'm just showing you some of them. So this is the DIFC has asked you to submit it on the portal. You have to go into the portal. There's a small pop-up window which you need to fill it in and then submit. ADGM has issued a form which is shown here. First page is here. This are second, third, and fourth page, and you have to actually email it to them on the email address which is provided, which is economicsubstance@adgm.com. And otherwise, this is the standard form which is used by most of the other free zones, and even and of course for the mainland companies, the Ministry of Economy has created a tab on its website on economic substance where you need to go in and fill in your details and fill in the form online on that portal on the website itself. Okay, so that's kind of covers what I need to talk. I'm ready to now take your questions and whatever that you have.
Fabulous. Thank you so much. In fact, there are quite a few questions there. If you look in the Q&A, there actually, maybe you want to actually go through them. The first one is we've got here, what's the link to notify the ESR or email? Perhaps these are things that they want to actually talk with them directly, but there are quite a few questions. Thank you so much.
No problem. So let me take up each of them. So what links to notify the ESR? Now each of the licensing authority has in fact intimated all of their licensee how to submit the notification. So for example, I mentioned the DIFC, you have to go into your client portal and submit the thing. In case of say, Dubai Aviation City, you are given an email address through their circular, and you have to fill in the notification which I just showed on the screen and email it to them. And similarly, each free zone and each regulatory authority has a different mechanism to notify them. So that's one. So is notification required for if no relevant activity? That's very important question. Yes. What has been done is that while the law talks about those who needs to notify are only those who are carrying on relevant activity. However, the licensing authority do not want to take that risk on their head to determine whether you are carrying on the relevant activity or not. So by default, a lot of this licensing authority like DIFC, ADGM, DMCC, and a lot of the other free zones have made it mandatory for all the licensee to submit the notification so that at least they are not missing out on anything. So even if you're not carrying on the activity, depending on your licensing authority, you will still need to file the notification. So yes, Brian, it does seem to come down to where the control and management of the companies are. And that's the relevant demonstration that one needs, that yes, you have to have a control and management in UAE. You have to have adequate resources at your disposal to carry on this kind of activity that you're doing. And uh, like we said earlier, so a lot of this is coming from the various other compliances that are required from a global perspective. And therefore, a lot of the concepts are from a tax world, and there are tax treaty concepts and all of that, which are kind of being embedded in different way. So this ESR is specifically for countries which has low or no taxes. And that's why they don't want people to take advantage of this regime without having substance. And one of the point of substance is having control and management locally, So yes, it does come into that. Okay, so I go next to Rohit Gupta. Yeah, which technological innovative capability can help with the compliance? AI, process automation, etc. Rohit, interesting question. Uh, at the moment, it's only filing the notification and filing the ESR return. Once we have those data, maybe one can create that software and do it. But unfortunately, each of the licensing authorities have tweaked it and changed it in some way for them. So it's not a standardized thing where you can automate it. So you'll need to look at which entity you want to respond to and accordingly fill it in and give it out. So that's the first 3 or 4. I'll go to question number 5. Yeah, Brian again for permanent establishment. Yes, similar concept to permanent establishment and others, where you need to demonstrate control and management. Yeah. Next is Genu Verghese for single family business is covered under investment management. So if it is a single family office license which you have taken, and if you're actually doing the investment fund management decisions under that license, you might get covered. So you need to look at what exact activity you're doing within that, and then you might be a part of that activity. So again, the entire regulation is more about substance over the form, and therefore you need to be very careful while you're applying that you have to see actual activity that you conducted and actual revenue that you earn to effectively analyze whether you fall within the relevant activity or not. Okay, the next is from Sid Somani. Under investment management, whether in-house family office investment companies will also fall into it. Investment might include both public. So even for investment fund management, the fund manager could be investing in both public bonds, stocks also, and private equity also. So as long as you are carrying on the fund management business, yes, you will get covered. So like I said for Geno, that if you have a SFO license and you are doing the fund management on your own and you have professionals on board to help you do that, then you might get covered. You have to see actual activity that you carry on and decide whether this is applicable or not. Okay, and now there's one question from an anonymous person. Okay, whether a Dubai entity involved in a build to ship to model of business gets covered in distribution and service center business. Dubai entity bills to customer and the India entity directly ship the goods to customers in UAE and other countries. So again, sir, you have to analyze your business very closely. If it is directly going outside of UAE to a third port, you may or may not fall within the distribution center because you're not bringing goods to UAE and distributing it. But you may still be providing services to a foreign group company. And that might still qualify you to be part of the service center activity and not really distribution. So again, we have to see the exact nature of services provided and determine that part. To Mr. Ali, has the DED confirmed the deadline for filing and who requires filing? So DED, the Ministry of Economy, has confirmed the deadline of 30th June for filing to all the entities who are carrying on any of this relevant activities. They've created a tab on their website for economic substance where there is a notification format where you need to go and fill that in. There are only few challenges, operational challenges right now. that it doesn't allow, if you're not carrying on the activity, to file the form, number one. And secondly, it does not allow for some of the activities which are not on the license. So like lease finance you're carrying on, which is not on your license, then it doesn't allow you to file with the Ministry of Economy website. But all the others are taking it. So there are operational issues, but yes, there's only a deadline of 30th June to file, and it has to be filed online on the portal. Okay. The next one is again from another anonymous attendee. Hi sir, if it's an offshore company and receives consultancy services from foreign connected party for its unrelated customer outside UAE, does it fall under the distribution and service center, or will it fall under any other relevant activity? So if it is purely doing consulting services, only activity that you need to check is, of course, the service center activity, where your primary coverage is for people who are providing services to a foreign related party and not really receiving service from a foreign related party. So you need to see the facts and decide. And also, if you are responsible for overall operation of the other group companies outside, then you might have to check the headquarter activity. But otherwise, you need to see the activity and then decide on that part. Okay. One more anonymous question, which is, do you think with an introduction of corporate income tax in UAE in near future, the complexion of EISR reporting would change? Definitely. So the entire concept of ESR came about because we are being classified as a low or no tax country. If indeed we have a corporate tax in future, the entire complexion of ESR reporting and the mode of reporting and all of that will change completely, because then it might not squarely apply to a lot of entities who are paying the taxes here and enjoying the benefits, So again, yes, we don't know when corporate income tax will come, but it is a trajectory which, as Achal said in the beginning, that we started with EML introduction, then we started with VAT. Now that economic substance regulation has come, so you are logically going in that direction of having corporate tax at some point in time, So yes, more and more compliances will follow, and a lot of things will change once we have a lot of that, The next question is from Sumaya. As per law, distribution and service center, buying from foreign connected person and reselling outside UAE. You have said selling and distributing inside UAE comes under the distribution and service center activity. Can you please clarify? So, ma'am, one of the point is that you are actually importing goods into UAE, storing it here, and distributing. Now, distribution, yes, technical word used is at one point is outside UAE or in the Middle East. And there are two different words which are used at different point. So one is in Act and one is in the regulation. So that's why this entire confusion which still prevails, either whether you cover the third port shipment within this or not. But if you're actually bringing goods into UAE and distributing it from here, I would still feel that you will get covered within the distribution business. Whether you then distribute into UAE or outside UAE is the next corollary part of it. But at least you are fulfilling two of the three conditions which is required, and that's why we suggest in that way, So that's why we say that gets covered. And if it is purely third port shipment, but you are doing a facilitation of doing the entire administration of the entire business out of here, and that actually is being provided to group companies, then you might get covered within the administrator consulting services within the service center definition, So again, a lot of things on substance over form, a lot of on how do you exactly interpret and what do you look at it. But the determining point is what exact activity you have, what is the revenue, nature of revenue that you want out of that, and that determines whether any of this will apply to you or not, And there's one more question. Brian, thank you for that. Prashant, is it mandatory to submit the notification if the company is based in mainland Dubai and licensed by DET and not carrying on any relevant activity? And if yes, where to submit the notification? So, as I mentioned, the Ministry of Economy has already published a deadline for notification, which is 30th of June. In the notification, they encourage all companies to evaluate whether they are carrying on relevant activity or not and submit. The form which is there on the Ministry of Economy website also allows to go forward only if you select yes to any of the relevant activity. And if you select no to that, it doesn't allow you to go forward at the moment. But like I said, a lot of regulatory authority are passing on that burden of deciding whether you are carrying on relevant activity or not onto the company. And they don't want that onus onto them. And therefore, that might change, because as we have seen in a couple of the free zones, where they started with issuing first circular saying that only those who are carrying a relevant activity should file. And then within a week or 2 weeks, they issued an amended circular saying that all the licensee needs to file. So we don't know if that happens with DED as well. So notification is to be submitted on the Ministry of Economy website under the separate tab on economic substance. Okay, so that's for Prashant. Mr. Gautam Pai, in case of multiple group companies in Dubai, we would need to notify and comply with ESR requirements company-wide, or is there an option to consolidate? Sir, this entire regulation is for every license. So more the number of licenses that you have, more the number of notification that you need to do. So it's not, there's no possibility to combine them at a group wide level and consolidate and report at one level, There's one more question from Gino. Sir, any update on JAVSA due date and the manner in which need to file notification, and all licensees are required to file? Gino, JAVSA has not yet issued a formal circular to all its licensee, but we are expecting that will come within a day or two, because as per Ministry of Finance, the deadline for everybody to report is 30th June. And therefore, the regulatory authority, which is JAVSA, which reports to Ministry of Finance, needs to comply with that as well. In our last discussion with JAVSA authority, they said they are at the final stage of issuing that circular, so it should come any day. And they will also provide the manner of notification and all of that. The next question is from Javed Rahman. Is loan to head office for 90 days, but auto renewal is needed to disclose as lease finance? Sir, if this loan is interest bearing, yes, it would be a lease finance. Okay, and I think that takes care of all the Q&A so far.
Thank you so much. You were on a roll, so I did not want to interrupt you. I am sure that our participants were delighted that you got through all the questions. I was amazed. You just went out there. You're as smart as a whip, as I call it.
No, thank you, Dinah. But there's one more question that has come up.
Okay, this is the last one because we're over our time. Okay, let's do it.
Just last question, yeah. So, Mr. Mohandas, the word substance has been used in two contexts. One, the substance over form, and the other, substance of the company, which is to prove that in substance the company is existing in the country. Do you agree? So, sir, the regulation is to be applied under a principle of substance over form. So what is only stated in license will not suffice, and what actual activity you carry on is what is determining factor. So that's at one end. And you are correct that it has been used in different contexts, that once you follow and you fall within one of the relevant activity, you need to demonstrate that you actually have substance in your operations within the country. And therefore, you actually have people, premises, expenses, and control and management being done out of UAE to meet the requirement of the economic substance being justified. So yes, it is being, in two different contexts, it is being used. Yes.
Okay.
Well, so that takes care
of the questions for the time lot we have. But to make sure that our participants know that we will be giving you the contact details of our keynote speakers, and you can get in contact with them directly or contact us. So of course, we're there. We want to make sure that your questions get answered. We're hoping that you'll be back again, because I'm sure there'll be some changes coming in the new and better normal, and you will be able to, we would love to have you back. And so thank you so much. Thank you, Ashal. Thank you, everyone. Thank you, Eric. I know Eric here in the background. He's been busy making sure this is happening for us too. Yeah. So special thanks to really making it a clear perception so that people know that they how to make it a better normal. Is there any closing comments you'd like to say at all?
So,
Shah, would you something?
first of all, thank you to Canadian Business Council for having us over for doing this session. It's a very important regulation which has come in, and everybody needs to be aware of that. And therefore, thank you for giving us this opportunity. And if there's anything at any point in time that we can assist you with, do let us know.
Oh, thank you so much. That means so much for our members and friends. That you have been absolutely amazing. The time has flown, and you have given us vital information. So again, once again, thank you so much. Of course, connect with us at the Canadian Business Council. We have your back. We want to make sure that our members and friends. We actually have our membership drive right now on, just so many of you know, and we'll be sending emails out to you. We have a special thing also to help with the COVID-19 rebate, so that to help our businesses grow. We want to make sure to thank again Legacy Emirates Group. Thank you so much, because if we have your back, they have our back. So it is like a teamwork. So
yes,
again,
exactly.
Wishing you the best day ever, a productive, a wonderful day. Keep safe and take care. Till next time.
Thanks.
Ciao. Bye-bye.
Thank you.
Bye-bye.
Bye.
Thank you.